Hey, this is Justin with DayTradeTheMarkets.com on Wednesday, January 30th, and I wanted to do a bar-by-bar replay of the emini S&P today, and I'm going to do it on a 1-minute chart, looking at again the emini S&P. Today was an FOMC meeting, so it was a little bit of an odd day, and I found this day a bit challenging. But I think it's important not to just show amazingly perfect days, and there are days when everything just sets up beautifully. But I think it's also important to really go through days that are a little more confusing, because it's all about the thought process. It's all about the decision-making process. And with that said, what I want to do is kind of go through every little decision point throughout the day. And this is kind of the second email, or the second video that I put in this email. And I hope if you're not familiar with this, that you'll, if you're serious, take the time to watch the first video that I put on this email about what we call a mechanical way of judging this idea of confluence. And by confluence, what I mean is that we have various pieces of evidence that we look at in real time as well as in pre-market. And the more of these pieces of evidence that come together, if you have just one, that's good information. But if you have 2 or 3 or 4 or 5 of these that come together at the same time, then you have a very high edge probability type of a setup. And so that's what I mean by confluence. If you can have the patience and the discipline to wait for several pieces of evidence to come together, I think that's what makes sense. And so if you watch that first video, it's called a mechanical way or a mathematical way of judging confluence. And again, that doesn't mean you want to trade mechanically, but I think it's a good thing, especially when you're just getting going, a good decision-making process. And we really talk about decision-making process a lot. That's, to us, the key to trading, is learning how to, number one, make sense of the market in real time, and then number two, have a process for making good decisions, because if you can consistently make good decisions, you're going to consistently get good results. So with that said, I thought, if you've taken the time to watch that video first, I thought I would just kind of go through each little decision point and talk about some of the ideas and kind of go check by check on that. So when, with that said, opening the day up, we want to look at our bigger picture bias and our bigger picture support resistance levels, and that we have in a report that we do every night. And so heading into the day, our bigger picture bias was up. So all things equal, we would rather be on the long side. And we also had a couple key levels that we wanted to monitor around 0.1 quarter, which is right there. So I'll just put a line in there. And then also one at 99.50. So, all things equal, we would like to trade against these if we could. So heading into the day, we have these two levels to at least monitor, see if they can act as some support. Okay, so that's the context heading into the day. Now we want to, once the day starts, we want to see how we can use that bigger picture bias, but also pay more attention to what's going on with the intraday or current real-time structure. Okay, so let's go ahead and play this video forward, and you can see here that we open up, and what we want to do here is we want to see how the market reacts. Let me pause this here. We want to see how this market reacts at this first level, which is the 0.1 quarter. Okay, and if you look at what the market's telling us at this point, we have right here, let me just pause it right there. We have a situation here where if we were to, this is what we call potential position type day trade, where we're in line with our bigger picture bias and we're taking a trade at a bigger picture support resistance level. Okay, so here's a situation where we have a bigger picture level at 0.1 quarter. It's in line with our bigger picture bias. Now, we don't have any filter yet. We don't have any real major structure. We do have a deceleration. So this is a type of scenario that, ideally it might be a trade where if you're a little more aggressive or like to hold for a little bit longer, you can get into this type. This is a potential setup here, more of a position day trade. But it's basically got two things going for us: a bigger picture level, bigger picture support resistance, a bigger picture bias, and bigger picture support resistance. Nothing and some confirmation. So I guess you could call it a +3 scenario if you were looking to get long in that area. So that's kind of the first decision point where you might consider looking into the market. And now here we have, let me pause it, here's our first major structure of the day, a level 2 buying aggression bar, and that's telling us that some strong buying aggressions coming into the market. We want to monitor to see if we can get basically a full bar above this high, or if the market can take out this low and get a full bar below there. That's going to give us our first kind of roadmap clue, not major. And again, this is also in the context of there's an FOMC meeting today at 2 o'clock, 2:15 Eastern, and so we want to keep that in mind. But that's kind of a structure that we want to watch at this point. So we'll play that forward. And you can see here we by full bar I mean not even touching. We haven't quite had a full bar above at this point. And here's our first support resistance zone that's come into play. And again, this is a support zone. All things equal, this is a good place to be a buyer. All things equal, this is a good place to be a seller, and you'd want to think twice before buying into that. You'd want to think twice before selling into this. Okay, so that's just something to watch. So we'd like to see if this can take out this resistance zone here on the high. That's something we would want to watch as this is going on. And also, we have to be thinking, let me pause it again. It looks like that resistance area is going to hold. So now we have to think about this potential area to be getting long right in here, okay? Let's kind of check it off. Is it with our bigger picture bias? Yes, a long trade would be. Is it at a bigger picture support resistance level? No, but it's not in 20 either, so that's kind of a neutral. You know, let me go ahead and just do this. So we'll put that as a plus. We'll put that as a neutral. Do we have aggression bar structure? Well, yeah, we know that all things equal, the low of one of these strong aggression bars should act as some support. So I'd put that as a plus. Okay. Do we have a support resistance zone? Yeah, if we get long in this area, which happens to correlate with that, that's a plus. Do we have a filter? No, our filter is not showing us any major order flow coming in at this point, so that's neutral. And do we have any confirmation? No, we haven't tested in here yet. But you know, that's a scenario where if you were looking to get long here, basically it's a +3 situation. You have some edge. Not the greatest trade in the world, but there is some edge if you were looking to get long right in that area around the, you know, the 03, 02, 75 area, somewhere in that area around this green zone. So that's something to monitor. It's not 4 out of 5. It's not 4 or 5, but it's a +3. It's a decent edge on that type of a trade. And so let's just assume, for example, that we want to get long at that area around, let's say, 0275. Because again, it's a, you know, so let's say we got long somewhere right in here. Okay. So at this point, we want to think, where do we want our stop to be? And you know, a really tight stop would be about, you know, a point to a point and a half. A moderate stop would be 2 points. Ideally, structurally, you'd like your stop to be somewhere below the low of the day. Now, if your stop is at, you know, 1550 and you got long, that's a little bit more. That's, you know, 9 or 10 ticks. That's a lot. That might be more than you're comfortable with. So the way that I like to look at that is, and again, let's say that you are getting your stop is somewhere down in here below the low of the day, and let's say we got long in here. That's 9 ticks. Okay, we don't want to lose 9 ticks ideally. So what we can do is, but we know we wouldn't be wrong until this low was taken out. So we want to give ourselves enough room that we don't get stopped out while we're still right, but we want to also protect ourselves. So the way that I look at that is put your stop down here structurally. If something major happens right away, you get stopped out for the full loss. But most of the time, so you want to be protected, but most of the time you're going to have some kind of evidence, if you're wrong, prior to the stop getting hit, that you can bail early and not take the full stop. Okay, so that's kind of the thought process at this point. And then in terms of if this works out, we have to think about where we're going to exit. We could think to exit here at the red resistance area, or we could just wait until we get some selling aggression if this trade works out. So let's just let it play forward. You can see we're taking a little bit of heat here. Now here is our first, let's just go ahead and stop it. Here's our first scenario that things might be changing, that we might want to consider bailing out of this trade. Again, if we got long right in here, you can see that this support zone is no longer holding. Now it's turned over to what we would expect to be resistance, and our filter just turned red, showing us that there is some order flow coming in on the bearish side. So at this point, right when that comes in, this is a good opportunity. You have a choice here. Are you going to stick with this trade and hold your stop in here and risk 9 ticks, hoping this comes up, or are you going to bail and take a 4 tick loss or so? That's kind of a choice. It's up to you, but that's an option. That's kind of using the evidence that you're getting to make the best decision. That doesn't mean every trade's going to work out, of course. It just means, you know, number one, if you decided to take this trade, getting long somewhere in here, it's not a perfect trade, but there was some edge there. How do you determine when to get out? Well, things have changed. What the reason for getting in the trade no longer is as valid. So, you know, think about bailing at that point. Okay. So let's let this play forward. And we also, you know, with that said, we also want to think about, do you want to get short here? Do you want to get short in this area? Well, let's kind of play it out. Do we have our bigger picture bias? No. So that's a negative. Do we have a bigger picture support resistance area? No. In fact, we're trading into a support level within about a point. So I'd put that more as a negative than anything. Do we have a aggression bar structure? Well, we're below our only major structure, so I guess you could say that's a plus. Do we have a support resistance zone? Yes. If you're getting short at a red zone, that's a plus. Do we have our filter? Yes, that's a plus. And we don't have any confirmation at this point, but basically you can see 2 negatives, 3 positive. That's basically a +1. So it's not a high edge, but a little bit of edge if you were thinking about getting short there. It's not something I would necessarily recommend doing, but that's an option to get short there. Okay. So let's let this play forward at fast speed. Now we got a deceleration there, which would have made it a +2. Okay, so that's potentially an option. Now we're testing this level at a 0.1 quarter again, and see what happens. So if you got short, it worked out. But was it a great decision? It had a little edge, not crazy great edge, but it had some edge. Okay, now we're seeing if we can pierce this 0.1 quarter level on the downside. Okay, now we're testing this 99.50 area. Okay, now let's stop it here. This is a bit of a conflict situation. Okay, we have a couple of options. Number one, if we test down here in this green zone, we have a potential entry. And let's break that down. And then there's also a potential entry here in this red zone. So let's break down this potential long here at this 99.50, 99 area. Okay, what do we have going for us? Are we with our bigger picture bias? Yes. Do we have a bigger picture support resistance area? Yes, we have 99.50. Okay, do we have aggression bar structure? No, that's against us. Do we have a support resistance zone? Yes, we have a green zone. Do we have our filter? No, that's against us because it's negative. We don't, confirmation maybe could happen. Again, that's a +1 scenario. Not huge edge, but there is some edge there. So that's, it's an option if you wanted to get long toward this green zone. With the bigger picture bias, with a bigger picture support, with intraday support, there's some edge if you were to do that. And there's a confirmation there, a decel, so there's a little bit more confirmation for doing so. And if you did get long here, you'd want to put a pretty tight stop in here below this green zone. You know what, let me bring this up a little. And if you did get long, you'd have to be thinking about getting out at this red zone here because it's also a bigger picture resistance area. And at the same time, let's break down potentially, do we want to get short in this area? Well, is it with our bigger picture bias? No, it's against that. Is it with a bigger picture support resistance area? Well, yeah, this 0.1 quarter area should act as some resistance, so that I would put that as a plus at that point. Is it with aggression bar structure? Yeah, the high of this high velocity move should act as some resistance right in there, so that's a plus. Okay. Do we have a support resistance zone? Yeah, we have a resistance zone. Do we have a filter? Yeah, we do. Red filter. Do we have confirmation? We don't know yet, but that's got more of an edge. That's about a +3. Okay, because it's 4 pluses, 1 minus. That's +3. So this is not a bad area to be getting short. Okay. So let's play that forward. Okay, now one caveat here, right? If you're getting short or looking to get short right around this blue line, there is one caveat here that this level 2 buying bar came in right there. So that's, we can take out that aggression bar structure as it being helping us. Now it's hurting us a bit. We see that some strong buying is coming in, and that high was taken out right away. So this makes this more of a neutral type of a trade setup. And again, I'm telling you, this is a confusing day. Most days it lines up perfectly. I mean, if you look back to yesterday here, we had that same 0.1 quarter area, green filter, up bias, green zone. I mean, it was just kind of perfect at the end of the day. That's when things are lining up, and it's easy. on a day like today, at least in the first half of the day, it was very confusing. But I think that's why I wanted to go over this, because it was confusing, and there will be days like this where it's confusing. But your job as a trader is to try to make the best decision possible, and sometimes that's minimizing loss, okay, and waiting and being patient and living till the opportunity is really there, okay. So if you got short here, you know, you'd want to think twice about getting short here, because you were seeing some buying that's starting to come into the market there. Okay, but if you did, you'd want to make sure this thing works out for you pretty quickly, and you can see that it's against you. There's a level 1 bar. You probably want to bail for about a point loss there if you did get short. Okay, but again, let's just say we had the long here, take a small loss, potential short here, which would have been a decent win, potential long here, which would have been a moderate win, and a small loss right here. Now we have a situation, let me pause this, where it's starting to line up a little bit better at this point. Okay, you can see here that our filter just turned green, this turned green. So let's break this down. This one's lining up a lot better. So if we were going to get long somewhere in this area right here, what do we have to work with? Bigger picture bias, yes, that's plus. Bigger picture support resistance, yeah, now we're back above 0.25. Okay, that's a plus. Do we have aggression bar support? Well, we're above our latest aggression bar, so yeah. Do we have a support resistance zone? Yes, we have the green zone right there. Do we have the filter? Yes. And then we have a potential confirmation there, or we could wait for the market to test in here a little bit lower. But you can see there's a very high edge to getting long somewhere in here. Does that mean it's going to go make new highs? Not necessarily, but there's a pretty good edge in getting long right there. It's a pretty safe entry. Could it lose? Of course. And if it does, we would see some evidence of that. We'd want to bail early, but there is a decent opportunity to get long right there. So let's see, let's let this play out a little bit. Okay, another decel right there at the low of the zone. That's a decent opportunity. You can see that a lot of things came together right there to get long. Okay, so heading higher. We're up a point, level 2 bar, another level 2 bar. We would probably want to place our stop somewhere below this level 2 bar here, because this should hold if this market's going to go test higher. And if it doesn't, you know, we live to play another trade. And again, it's Fed day. It's noon Eastern on Fed day, so take this all with a bit of a grain of salt. But again, the idea is, was it smart to be getting long here? Yes, a lot of things lined up. You're not getting hurt. Move this forward a bit. Okay, now you can see we got a level 2 selling aggression bar. So we're certainly probably out of this trade if you got long for either a small profit or a break even. Okay, but again, the decision made sense, and if this thing would have gone, we would have hung with it. Didn't happen. Now some more sellings coming into the market, and you can see we're back to the same decision essentially that we had here. Now the difference is we don't have our filter with us at this point, but you can make a case for getting short here. Again, it's Fed day, noon time, not the greatest trade in the world. It's against our bigger picture bias. We do have this level, but we've tested it a few times. It's not going to hold as much. We have a little bit of aggression support. We have a resistance zone. Our filter's not there with us yet. So it's a moderate to small edge, if anything, if you're going to get short in this area. So if you got short there, again, this is more aggressive. I like waiting for situations where a lot of things line up. I'm just trying to go through the thought process there. And if you got short here, you know, it's bounced a point in your favor. But again, it's getting pretty slow at this point. You know, Fed day. But if you got short there, you didn't get hurt. Again, that's more aggressive than my taste, but that, you know, that's up to you. Now we're back above it, and we have another scenario where basically it's the same scenario we had here. Do we want to think about getting long somewhere in here? Okay. Now we're getting close to our Fed meeting, so we want to again be very careful. But certainly getting long somewhere in here against this 0.1 level, 0.25 level, bigger picture bias is up. We have a green support zone. You can say there's a moderate edge in there, with the caveat that the Fed announcement's coming pretty shortly. So probably want to be careful. So again, you know, is this the sexiest day ever? No, this is a kind of a strange day. This is not one of those, you know, perfect trading days, but I think that's really important to go over those types of days. Okay, you can see we got a little buying aggression that came in off of this zone, but now we're getting into the announcement time. And I wasn't actually here for this like half an hour section of time right here, but still. So now, okay, let's stop it here. The Fed announcements come in. We bounced off of we bounced, you know, 2 points off of this green zone. So if you did get long there right ahead of the announcement, you have some guts, but you know that's didn't hurt you. Now we have another scenario here where we have a situation where do we want to get short right in here? Well, again, it's against our bigger picture bias. At this point, the 01, I mean, it's still a plus, but that level's been tested quite a few times. Aggression bar structure, we're below our latest aggression bar right here, so yeah. Resistance zone, yes. Filter just happened, yes. So this, you can see there is more edge. There's, you know, this is a +3 scenario right here if we were to get short right in this area. Now it doesn't have a ton of room to move at this 99.50, but it's got a little bit of room. Getting short there, you have some edge. Is this the greatest trade in the world? No, but there is some edge in getting short if you're aggressive at that area. Okay, so let's let that play forward. Decelerates, that helps a little bit. Decelerates again. You know, again, not ideal, not the perfect scenario. It's not, you know, some days everything lines up and it's easy. Other days it's a little more confusing, and you either need some more, you know, some experience, or you really need to use this thought process to think it through, or you just stand aside and wait for things to line up. So now we're kind of between this 99.50 and 01 quarter, between this green zone and this red zone. Be interesting to see which side wins. Okay, now it's looking like some selling aggression starting to come in, and we have a high velocity move here. So, you know, what do you want to do? Do you want to get short now? Well, the resistance zone here has just shifted up to this 01 area. That happens to also correlate with the high of this high velocity move box, which is interesting. So there is, again, same scenario that we had here. Same edge applies right there if you want to get short. But again, it's not textbook. It's not perfect. It's not ideal. Okay, here's our first level. Let me pause this. Here's our first level 3 bar of the day to this point. Again, that's kind of indicative of a slow day ahead of the Fed announcement. But here's our first extreme buying or selling aggression bar. Okay, this is a really key bar. We want to watch this. What happens off of this bar is going to dictate basically what happens the rest of the day. Okay, you can see that it tested into this resistance zone. The first thing that happened is we had a level 1 selling bar. Nothing major, but we didn't have immediate follow through. So if this low can get taken out and we can take out this 99.50 area, we have to think we're going to be making new lows for the day. If this high can get taken out and we can take out this red zone, we have to think we're going to go attempt to make new highs for the day. Okay, because this is a first major structure. This typically means either the beginning of a big move higher or capitulation, and we're going to have a move lower. Okay, this is a very important bar, and hopefully, you know, you've had the patience to wait around until you had some really good evidence, such as this bar. Because when we get a level 3 bar, it's telling us something major is happening. We want to watch this. We want to wait around for this. Okay, so let's let this play forward. Okay, lows taken out. We have to expect at this point that we're going to go test some new lows. Okay, you can see some strong order flows come in. Let me pause this again. Some strong order flow has come in. We're now dark red. We have a level 3 selling bar on the low of the day. We would expect this high to hold. We've rejected this one. At this point, getting short somewhere in here, especially if this green zone can turn over in the near future, makes a lot of sense. Okay. Okay, and you can see that that red zone now, it just turned red. So getting short right in there, we're getting to a situation where it's more of an all signs are go type of a scenario where getting short in this area makes pretty good sense. Now we're getting toward the the end of the day, Fed day. And I understand also that this is probably confusing if you're not too familiar with this. And I debated as to whether I should even do a video because it was a very confusing day. But hopefully, I hope you respect the fact that I did do a video today, because I think it's important to deal with these confusing days and not just show perfect days. There are a lot of perfect days. There are a lot of days where things just set up beautifully. But I think it's also important to try to make sense of these more confusing days, and to do that on a couple different levels. Number one, to try to make it clear that it is confusing. There are mixed messages, because this is all about, at least the way that I certainly look at this, it's all about what is the evidence telling you, and can you tell a compelling story based on that evidence. And today there was a lot of contradictory, confusing evidence where instead of having +4, +5 type of a situation where things are just lining up perfectly, where it's a pretty safe bet, there was a lot of +1, +2 type of situations. Another point that I think is important to make is you don't have to just use this as a standalone. I'm kind of showing this as a standalone, but this is also very, very helpful, and a lot of people use this way, where you may have another method that you're using or that you've used for a long time. If you can add these additional pieces of evidence to help you make better decisions on whether you should get in or out on the method that you've been using, that's going to be very helpful. So hopefully this made sense. If you had questions or if you're confused, this is about as confusing as it will ever get, so don't feel bad about that. Let me know questions that you might have. I'm happy to help. I'm happy to clarify anything, and hopefully tomorrow it'll just be smooth sailing, and it's just easy. And if it is, I'll send a video out about that as well. All right, talk to you soon. Let me know if you have any questions about this. Thanks.